Inevitably, every year, April 30th rolls around, and many Canadians find themselves scrambling to put together financial documents and paperwork as they prepare to file their personal income tax returns. Now, while many people do find it a chore, including myself, I know that it does present an opportunity to find additional tax saving strategies. So in today's video, I'm going to go over 3 strategies that you can implement today to save on taxes. The first is to maximize your tax deductions and credits. There are a ton of deductions and credits available both federally and provincially, so I would encourage you to review the list to see if any specifically apply to you. For employees, these deductions might mean things like deducting your union dues or professional fees. For families, this includes things like childcare expenses. For things like retirees, you might see deductions through income pension splitting. Or for students, things like moving costs or even tuition fees. And if you are a Canadian with a disability, there is a whole range of other deductions that might be available to you, especially if you qualify for the disability tax credit. Another opportunity to minimize your tax bill is to take advantage of registered accounts when it comes to investing. When it comes to registered investment accounts, we're referring to things like RRSPs, otherwise known as Registered Retirement Savings Plan, and even spousal RRSP accounts. Of course, there's also tax-free savings accounts, which is a great way to invest, provided you have the room, as opposed to using a non-registered account, which we know is fully taxable. And finally, don't forget about the first-time home savers account, otherwise known as the FHSA, that was rolled out last year, 2023. And this is a great opportunity to be able to deduct up to $16,000, depending on your contribution limits. And finally, another strategy that some people like to employ is pooling their donation receipts over a few years. For example, if you've made a series of smaller donations over the last couple of years, instead of claiming them each year on your tax return, you could save them up for 5 years and decide to claim them all at once. And this will likely actually get you a bigger credit percentage-wise in the year that you make that claim. And of course, really good record keeping is going to make filing your tax return just a little bit easier. So whether you like to print things off or store them in your email, having a dedicated folder, whether it be through email or a physical folder, is going to make things a lot easier as you collect receipts, invoices, or tax slips throughout the year. You can tuck them away and know where to find them when tax season rolls around. So when it comes to minimizing your tax bill, be sure to take advantage of all the deductions and credits that are available to you, using registered investment accounts where it makes sense and when you have available room, and consider pooling some of your donation receipts in order to maximize your credit versus doing it each year. We have a full article on this topic, which you can check out using the link in our bio. And if you like this video, be sure to like and subscribe. Thank you for watching.